Bang.
We had some weird sound thing going on there, John. I didn't hear any of the intro, and I'm looking over at our great man Jared, and I'm seeing him going, "What the f?"
Well, no, only rebels can deal with this.
Hey man, you gotta roll with the punches, right?
That's right. You got to. You can let it destroy you, or you can build on it.
That's
And folks, welcome to the Rebel Edge. Pete Najarian and I host this show, and we appreciate all of your nice comments. After it was announced yesterday that I had departed CNBC, Pete is still a paid contributor to CNBC.
oh, who knew?
But we certainly appreciate all the nice retweets and comments and so forth. And to all the guys that hate it, well, deal with it.
John,
it also turns out, Pete, I'm going over to Fox on Wednesday.
Yep.
So,
and it's going to be great. It's going to be great. I don't understand all of the negativity of the whole thing when I see some, and there wasn't a whole lot. Let's be honest.
No.
Probably 95, 98% were people just going, yeah, it's great. You're going to be able to see John Najarian again. We love it and blah, 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 which is phenomenal. That's what we would hope. But it's kind of weird that there are a couple of guys out there, John, that are just so far politically and at the wrong direction that we're saying, well, then I'm not going to watch. It's like, first of all, it's Fox Business, and so, this is still the business channel, and it's, there is competition out there and a great opportunity that you have. So I congratulate you as well. I think it's awesome. It's great.
It will be fun, Pete. And Charles Payne, I'll be on his show tomorrow, Wednesday, 2 p.m. Eastern time. And again, encourage you to tune in and send us some questions. Charles wants to go back and forth with a bunch of you, and it's shaping up to be a pretty big show. So bang. Pete, 1 minute macro. I'm going to say it quick. The 10-year, which Pete always makes at the top of his list, is certainly one of the reasons the market's up today, because the 10-year is down to 4.06%, Pete, after being at 4.28%. It's back down. That gives the market a little momentum. Dollar goes down, gives the market a little momentum. What say you?
You're exactly right, John. And actually, I'm even going to say I think the dollar is even more of a tell than anything right now in that inverse relationship. As we've watched it, it's made an unbelievably rapid move to the downside underneath 111 today. And so when you look at that, then you get a little pop out of crude, John, and then you've got the NASDAQ going from down 200 the Dow down 200 to up over 200. Look over at the NASDAQ. It was down maybe 10 points, wasn't moving a whole lot, but that's been a mover of late. I think that combination certainly gives us a little bit of fuel for this market. We got Friday, we got Monday, now we're moving on Tuesday, and that's the direction in which we're taking.
Bang. All right, Pete, that's enough macro.
Yeah.
This show isn't about the macro, folks. It's about trades from real traders, people that are really putting their butts on the line with these trades. UPS. This is one, Pete, where I've actually taken profits on UPS, and I've switched over. I know I couldn't talk you into it, but I've switched over to FedEx, and I'm happy with the FedEx after that big drop it had. But UPS, world's largest courier company, they earned a lot of money, 9% more than the same period last year, which is pretty astonishing because you've got Prime Air from Amazon and so forth competing with them. I like the earnings over here at UPS, Pete, and I'm sure you do.
Yeah, I do, John. As a matter of fact, when you look at that revenue, that was strong. And when you look at, the revenue per piece was a pretty interesting number as well. But you know what, for me, John, it comes down to the model of the two. So UPS is ground. It's about the U.S. essentially. And then you look over at FedEx and they've got the international. I think that international has been a weight around their neck for a long time, which is why I've preferred UPS. I still do. But to your point, there's a lot of competition out there, and it continues to get a little bit tougher. And they were talking about some of the demand packages that's gone down. And because of that, that's one of the concerns. But an interesting thing is they've been able to raise those prices, John. And that's something that we talk about inflation all the time. I think this is a great example of, hey, look, they're able to raise those prices. People are still using them. Revenues are still pretty solid.
Yep. And I think that will continue, Pete, for some period of time. They certainly are not one of the folks rooting for higher crude oil prices. I'm afraid that's what we're going to see in the future, but they've been a beneficiary of the costs of fuel going down as they have. All right, Pete, what about Crown Holdings, CCK? Came out with earnings, $1.46 a share. That was about 30 cents under what the street was looking for, Pete. That ain't a good thing. Anytime you're going to miss on, earnings by that much, people are going to punish you and punish this stock. They are.
Oh, they're hitting it, John. As a matter of fact, all you've got to do is you could just say this. How much did you miss by? Well, we missed by about 17.5% on their earnings year over year. Well, how much is the stock down? Well, it's down about 17.5%. I mean, when you look at the correlation there, it's kind of interesting. But the reality is, when you put up those kind of numbers and you miss by that much, you're going to get punished. It's exactly what we're seeing today, which is the normal reaction. We've got some other stocks we're going to talk about where the reactions are a little bit different. But in this case, it's getting hammered for all the right reasons. This isn't one where you've got to sit there and try to figure out why it's going down so much. We know exactly why it's going down so much.
Yep. And what do they do, folks? Packaging, everything from, the consumer goods that we buy to larger packages that are more or less business to business. But apparently they couldn't raise prices enough, Pete. There was a severe pushback. And for that reason, that's why they had to eat it, meaning that they couldn't charge as much as they wanted to. So that comes out of somebody, and that somebody was CCK, Crown Holdings. So I'd let this one go a little further. I'm not buying it today. All right, take it to the next one, Pete, which is Logitech. If you've got one of these on your table somewhere, folks, a wireless mouse, any kind of computer peripherals, yeah, that's what Logitech does. It's a big Swiss company. They beat on earnings, but they came up a little light on revenue. So you might think they'd get punished. But you know what they did do, Pete? You talked about percentages a moment ago. They are going to cut their spending, their CapEx. They're going to cut it by 15%. So just like you said, when you miss by 17%, well, the stock might go down that hard. Take a guess what happens if you cut your spending like Amazon does from time to time. Stock goes up. And in this case, it's up 12% today.
Which is just astounding to see. And also, it's not a very big compliment to the, to some of these different positions or whatever, but the CFO is stepping down, but they're going to be part of the transition. So there's a whole, lineup of reasons why, John, this is a struggling company, but they are taking the proper measures that they've got to make sure that they can work themselves into the future. But the quarter, let's not make any bones about it. This is a tough quarter. They definitely had some issues, but they look like they might be putting themselves into a position a few quarters from now where this stock actually could maybe start to move in the way that it is like it is today, but could start to actually be a little bit more consistent because they've definitely been a struggle. And when you look at those revenues, John, that number was not so great.
No. Webcam sales, Pete, just like what you and I are using right now, down 36% year over year. Tablet and other accessories down 33% year over year. So I would be taking advantage of this pop if I were in the stock. I was not, but if I was, I would take advantage of this. I do think they'll be stronger going forward, Pete, but I think they'll probably give up a lot of this gain over the next month. So I would be saying sayonara for the short term to this stock.
Absolutely.
All right. How about this one, Pete? You and I have talked about it before on the Rebel's Edge. WEBR, big grill company, right? Yeah. They came public, tapped the public markets, got out there, and exploded to about $18 a share or so forth. They were down to $5, Pete. And down there at $5, that thing seems to be just struggling. down there at 5. So you know what? The largest shareholder says, we'll take you private at 625. Ouch.
You know what, though, John? How sharp are they? I mean, I'm looking at this BDT Capital, and what a great move. They already like what they see, except for maybe it's how it's being managed, right? I mean, there's obviously some sort of an issue there, and they're just saying, you know what, we're going to take advantage of this opportunity. Yeah, we're the largest shareholder. Now we're going to be the shareholder. They are going to be the ones that have stepped up to the plate, and they're buying it now at a monstrous discount when you look at what the market cap was just even a few quarters ago to where it is now. You were talking about it, but you were saying, what, $17 a share, something like that? And here it is down there near something close to 5. And then you get this move to the upside today on this announcement that they're going to be buying it somewhere in the 6s. I think they're getting a steal, John. I think it's going to be a great opportunity for them. And who knows, maybe in the future we'll see this thing kind of spin out once again. But it's a great time for an acquisition, and you've got to get your, my hat's off to BDT. This is a great move, I think, at this level to make that kind of a buyout, which I think they'll definitely accept.
And folks, this is a little private equity 101. What they're going to do is they're going to slash and burn at WEBR. And then, Pete, they're going to borrow like crazy and leverage it up. So in other words, they're not going to put up all the money for this takeover. They'll basically finance it through Jefferies or whomever. And then basically within the next 2 to 3 years, they will spin it back out. And, as long as they play that game right, this could be a really profitable trade for them. All right. What about a quick trip to Miami? Who wants to go to Miami? Well, we've got a big event going on there, the 8th through the 10th. Jared, play the commercial. Let's let people see it.
Introducing our new series of intimate in-person trading conferences in some of the greatest cities in America. It's Market Rebellion Live. First up, this December in Miami. Level up your trading with help from Pete Najarian, AJ Monte, Ryan Mastro, and Bill Johnson. Miami is limited to just 25 seats to ensure every guest gets personal attention. So act now. Tickets are going fast.
Bang. And welcome back, folks. That's going to be a fabulous time, Pete. You and I will both be there in Miami. AJ Monte will be there. Bill Johnson will be there. Ryan Mastro. I don't know if Yamamoto's going to make it. It's always good to see
trip, man. He's coming from all the way up. I mean, it's like in my days of playing in the NFL, John. I mean, one of the longest trips of all time had to be Tampa to Seattle. Now, the only one that might be longer is Miami to Seattle. But that's a long flight. So Mikey's way over there. That might take him a little bit. But I'll tell you what, is there anything even close to the food and everything down there in Miami that Miami brings to the table as well, John? You got the weather, you got the food, you got this great, all the different people talking and everything. That is a must.
Yep. Only 25 people, folks. So you probably won't be hearing about it too much longer from us because it's going to sell out. So make sure if you'd like to go, you go to marketrebellion.com/Miami. That's marketrebellion.com/Miami, December 8th through 10th. Bang, 2 days of live trading. All right, Pete, my first unusual today is going to be IWM. This is the Russell Small Cap Index, and they're buying puts again. And I must say, whoever they are that buys puts in the Russell has been so accurate this year, Pete. Several times we have cashed out big. Now that's, as we all know, past performance is no guarantee of future results. Yes, but what we're doing is we're not predicting. We are following large institutional buying of puts. How do I know it's institutional? Do you know anybody buying 43,000 put options, folks? Probably not. But that's how big this trade was. 43,000 of the November 168 puts. That's nearly $10 below where the stock was trading. It was trading at 176.67, Pete. So yeah, I had to put on a trade to participate, to follow this trade. Does it mean that the stock or that index goes down? Well, it certainly implies strongly somebody's worried about it. So that's why they would buy 4.3 million share equivalent of shorts in that position, Pete. I jumped on it as well.
Well, John, you know, and earlier you were talking about energy. We were talking about energy. I talked about crude starting the day at 84 and then popping up to 85 and a half. You said that you think crude is going higher. I agree with you, by the way. And those stocks that are within the energy complex have actually been trading much better than people would ever imagine, considering the fact that oil was up at 120s and then pulled all the way back. And where are some of those stocks now? Some of them are near highs, right? So it's been an amazing run. So I'm looking at this, John. Yesterday we had Marathon Oil hitting, and it was big. They bought about 15,000 of the January upside calls, sold the downside puts. But the trade for today is in the XOM. And I'm looking at that one, John, Exxon Mobil. We talk about the biggies all the time. There's Chevron, there's Exxon. Well, Exxon trading just underneath 107. And we had a buyer that expires on Friday. Today is Tuesday, so you got a little bit of time, but it's very short term. We're talking about Tuesday, Wednesday, Thursday, then they expire at the close Friday. So 4,800 of Friday's 107 calls. They're buying right on top of where the stock is right now, and they're paying about $1.60 up to $2 for those calls. I really like this one, John. I like energy, just like you. I think we're going to see crude prices probably start to make a move again. I think we're starting to see a little bit of a next move for natural gas as well, which went from $10 to $5, and now it's starting to inch up a little bit. We'll see if that actually has anything behind it. But I think crude's going higher. I like this trade, and I like these calls. It's very short term, but you're going to find out an answer very, very rapidly on this one.
Right. As Pete says, folks, you've got to cut losses fast or take profits fast, because you've only got till Friday. You've got 3 more trading sessions when the bell rings today. So be aware of that. But nonetheless, I'm with Pete on the trade. I think we could see a pop to 88 or so, Pete, ahead of the election next week. And, you know, we both know this means that this stock would react positively to such a pop. All right. Let's talk a little bit about sports. We started it off yesterday with the NFL. Let's switch it up, Pete, and talk about college football today.
And if anybody's complaining about why do I go college and NFL each and every day, it seems like on the tape. Here's why, John, on Rebel's Edge. Here's why. Basketball season just started. Baseball season, you know, well, we're finding the series, but it's not the teams everybody really wanted to be there, because everybody was, you know, looking at the Dodgers, looking at the Yankees, going to that cross thing. Everybody was excited about that. All that being said, the excitement still is in college football and the NFL right now. And in college football, John, I think that the Big 12 has really shocked the world this year. And what I mean by that is when you look at all the different teams in the Big 12 that are highly ranked, it has been an amazing year because everybody focuses on the Big 10. And then, of course, they look over at the SEC. But TCU, this team, John, is number 7 in the country. And all they've done is, well, they took care of SMU. They took care of Oklahoma. They were highly rated. They took care of Kansas. They were number 19. They took care of Oklahoma State recently, number 8, by the way. Kansas State, number 17. And they've got a quarterback, John, Max Duggan. Now, what makes this kid kind of interesting for me is he's from Council Bluffs, Iowa. Do you know where that is? That's right on the river between, you've got Omaha on one side, you got Council Bluffs on the other. How this kid got away from Nebraska, I have no idea, but he's a 4-year starter. He's got 19 touchdowns this year already, John, with 1 interception. I think the kid's doing pretty well. I mean, and he's got a running back who's unbelievable. This kid, Condre Miller, has been unbelievable. The kid's averaging 6 yards a carry. He's got 10 touchdowns. This team, I think, can slide up as long as they can get by 2 big opponents. They got Texas on the road. They got Baylor on the road. Those are big games. Those have turned into huge games. And TCU puts up a lot of points. The problem is their defense gives up a lot of points as well. So do you think TCU can get to that playoff, John? I'm kind of starting to feel like they can, but they got 2 biggies in front of them still.
They still do, Pete. And I know what you mean about Texas, but they haven't proved to me that they're anything but just a middle of the road team, not a high. You know, that's not in TCU's class, I don't think. They'd have to be looking beyond it to not beat those guys, even in Austin. But I do think that quick strike offenses, which you mentioned the 19 touchdowns, that implies a quick strike offense. And that means your defense comes back on the field pretty quick too. So you've emphasized time and time again how if you can control the ball for 35 to 40 minutes, that doesn't give the other team much time to beat you. It keeps the ball away from the other team. That's why, like I say, they've stressed their defense a little bit. It's probably not because the defense is bad, Pete. It's because, the quarterback and the offense are too good. It's just like the old San Diego Chargers. If you score that quickly, it's difficult for the defense because they're just catching their breath and they're going, wow, we just put up 7, but man, I barely caught my breath and we're back out there. So that's one of the things I'd focus on. But yeah, I think these next 2 games, they can roll through those. I'm not worried about Texas, Pete. Maybe I should be, but I'm not. And I think TCU rolls on. So tell me about some of the – go ahead.
I was just going to say, I think you're right. That Texas game might get daggone interesting, though, John, because it's a road game for TCU. But let's be honest, they travel well. It's going to be a packed house. And I'll tell you what, Bijan Robinson, the running back for Texas, is a beast. He is a heck of a football player himself. So Texas has got some players. Do they have enough to go up against TCU and take them out? I don't know. I think TCU is looking at that playoff picture saying, you know what? Why not us?
Yeah.
Here's the next one, though, for you, John. Now, I'm a guy who's got a gray beard. You got a little bit of gray. We're both older guys, but let's get real. The gray beards in the NFL have got to start looking at themselves in the mirror and know that they need to step away. And here's what I mean by that, John. So I'm going to start off with Matt Ryan, 37 years old. He's got 9 touchdowns. He's got 9 interceptions, and he's got a QBR of 42. That ain't so good, by the way.
No.
Matthew Stafford, 34 years old, another gray beard. Last year wins the Super Bowl, but how about this year? He's got 6 touchdowns and 8 interceptions. That ain't so good. He's got a 45 QBR. Andy Dalton is still around as well at 34 years old. He's got a little bit better touchdown to interception, not much. He's got the highest QBR of the Graybeard. He's got a 51 of the Graybeards. He's actually doing pretty well. Joe Flacco's 37. He's got a 30 QBR, John. The guy, look at these guys. Russell Wilson, he's only 33, but he's pretty awful. Let's be honest. Everybody's calling him out. And that trade, and we talked about it yesterday, was unbelievable for Seattle. It was about as stupid as could be for Denver. It's unbelievable. His QBR, he's all the way up to a 35. It's unreal. But what we're seeing too, John, is how about Brady and how about Aaron Rodgers? I'm not negative on those guys. Their QBRs are not very good, though, when you look at what their ratings are right now, especially when you look at, Pat Mahomes. He's got a QBR of 76, John, just for comparison. You've got Josh Allen, 76. You got Tua from down in Miami. He's about a 72. All of these young bucks are starting to take over, and a lot of these graybeards maybe need to start deciding, I need to step away. But you know why they're not? The money.
I've got a couple 100 million reasons, Pete.
Yeah, you and me both. But I feel bad because Matt Ryan was such a great player in Atlanta. He had a great career. And then he goes off into the pasture up there in Indianapolis where the quarterbacks go to die. Carson Wentz was the last one that was up there. Now he's up there. Peyton Manning had to leave just to get to Denver to make it actually all happen. It's really too bad, John, what we're seeing right now where you look at these guys and go, man, you are so great. You need to know to step away. And I think that's the problem right now with some of these teams is these quarterbacks just aren't what they were.
Yeah. Well, like you said, Pete, we all get older. I'm looking forward to a new transition for me. I'll be, like I say, joining Charles Payne tomorrow on Fox Business Channel at 2 p.m. Eastern Time. Pete, as I've said, is still a paid contributor over at CNBC. And by the way, folks, if you'd like to follow us this evening at 4 p.m. Eastern Time, we're going to be doing a little discussion of momentum trading. So if you'd like to jump on the momentum in the market like the Rebels do, it's a free webinar. You can join us, but you got to sign up at marketrebellion.com. You'll see it right when you go there, marketrebellion.com. You can sign up. You'll join us. If you can't be there live, we will send you a copy regardless of whether you're there live or whether you have to join us after the fact. I hope you can do one or the other or both and see us tonight, 4 p.m. Eastern time for our momentum trading analysis. All right, that's going to do it for us today, Pete. Have a great one. I'll see everybody on 3 at 3 p.m. this afternoon.
It's earnings season, and we're on the hunt. The hunt for momentum. Earnings calls means big moves that are ripe for options plays. Join John and Pete Najarian live this Tuesday, and they'll show how they hunt for market momentum. This free webinar will show you specific strategies to find and trade short-term momentum in today's market. And if you can't join us live, register anyway, and we'll send you a recording after it's done. Don't miss your chance to see how professional traders are taking on the market this earnings season.